Hey everyone, this is Kirk here again at OptionAlpha.com, where we show you guys how to make smarter trades in the market. And today we're going to go over all of the opening and closing trades for Thursday, July 24th. Now, as always, if you guys have any questions or comments as we're going through this video, make sure you add them right below into the comment section. I'll be sure to get back to all of those tonight or tomorrow before they open. Now, we had a pretty busy day here, opened up 5 new positions, so very, very busy as far as strangles and calendars, as you can see, and then also closed out of one position, which was our Facebook strangle and earnings trade for Facebook that we closed out of for just a very tiny profit. Unfortunately, Facebook stayed right in the range that we thought it was going to go, but at the open today, we just didn't know how far it was going to go, so we closed out the trade early. Could have ended up being a really big time winner, but it is what it is. That's trading, right? So I'm first going to cover the trade in Facebook. And first I want to go back to the chart here and just show you guys what happened with the stock. So you can see visually that the stock had a huge gap higher today on some pretty good earnings and guidance, right? And that's, I don't know, not to say it was expected, but I was definitely tilting this thing towards the top side. I thought that if anything, Facebook was going to, kind of beat estimates and move higher instead of gapping lower. But what's really key about this chart and why I brought up this bottom section or this green line is that implied volatility, like I said before in the video last night when we talked about this Facebook trade, is that implied volatility absolutely got crushed in Facebook. And you can see how quickly implied volatility can drop for these stocks around earnings. Now, I've mentioned it a number of times with a lot of stocks that have high implied volatility, and we talk about why we trade strangles into an earnings event. And that is because of this volatility drop that we see right after the earnings event happens. So as soon as Facebook opened up today, it took only about 2 minutes before implied volatility dropped like a rock. Everything started to reprice. And you can see where implied volatility was up around 45% for Facebook. At the end of the day, it was down at 31. So a huge, huge drop. And now you can visually see that IV drop on the chart. Now for us, what we ended up doing was just buying back our spread at a very, very small debit of, or a very, very small profit of about $2. So the spread that we actually traded, we sold it for about $1.32. And you can see Facebook closed inside of our range, which was 76 and 66. But hey, who knows what could have happened if we could have had another scan disk situation where the stock opened up inside the range, but then quickly rallied outside of that range. So you just never know with these earnings trades. It's best to get them off very quickly. You either make money very quickly or you don't, but don't hold them too long, especially since this is a weekly option. It expires tomorrow, so it's going to be a little bit more risky and harder to get out of by tomorrow. Now, let's talk about some of the opening trades to carry on with the earnings cycle. We have 2 new earnings trades that we made. The first is in Pandora, which is just P. Note this is not just a put option. And the second is in Baidu, which is BIDU. Now, both of these are set up exactly like Facebook, where we traded the front weekly contract, so the most current and the most recent contract, which is the weeklies. These do expire tomorrow. So if you are in this trade and something happens tomorrow where it gaps higher, obviously we'll send out alerts. But just as a word of caution, these contracts do expire tomorrow. I would highly suggest that you do something with the contract, either close it out or roll it out to August expiration or September, whatever the case is, very quickly tomorrow morning. I wouldn't wait too long to do anything with these trades. I sure know that we're going to definitely be very active early in the morning with closing out these trades, whether they're profitable or not. We're going to see a huge drop in implied volatility tomorrow in both of these positions because the contracts have basically no time left. So talking about the setup though, with the strangle in Pandora, we did the 31 call to the top side, which is the 31 call. And then below the market, we did the 25 put. So that's where we actually kind of based our trades on, is the 31 strike on the top side and the 25 put below. Now we took in a credit doing both of these of about 75 cents. So that moves our break-even point out about 75 on the top and the bottom. So it gives us a little bit more buffer than we actually really need to have. And you can see that both with Pandora here and with Baidu, I'll show you that implied volatility still remains pretty elevated right now. And after they already announced earnings after market, Pandora's already trading lower after market after announcing not too good earnings. So I actually want to go to the Analyze tab here and take a look at Pandora so you guys can see exactly where this trade is setting up right now. So here's where what our strangle looks like in Pandora. And you can see it's a very, very wide strangle in Pandora. The stock closed around 28 or so today, so we were pretty even, but now the stock is trading at 25.70. So you'll see that it's actually on the lower end of our range, which is fine, and still inside this range that could make us some money tomorrow. So as long as Pandora continues to trade inside this range by tomorrow, that gives us a great opportunity to make some money in Pandora with an implied volatility crush, which will ultimately happen very, very quickly. One little note on this trade as well. With our strike down below at 25, which pivots here, and above at 30, you'll notice that our break-evens are even further out from that. So that 75 cents that we took in now moves that break-even point out just a little bit further on each end, helps capture a bigger window of opportunity to potentially profit for Pandora. The same thing happened with Baidu. With Baidu, we actually kind of tilted our strategy just a little bit more to the upside, and I'm glad we did, because after market, Baidu announced earnings and the stock actually popped higher. So this is something that, again, not that I was expecting it, but I was just kind of tilted a little bit more bullish with Baidu given its recent run-up. So with Baidu, we did the 225 calls and the 190 puts, took in a massive credit of 251 on the strangle, so very, very big credit. That moves our break-even point out on the top side to 227.50. So we add 225 to 250, and that's how we get the 227.50 on the top side. Obviously, it moves that same distance down below 190 on the bottom side. But we go here to Baidu. Baidu's had a huge run-up heading into earnings and is going to have a really, really good earnings event and just continue to move higher. But notice, again, just like how Facebook was before and how Pandora is right now, implied volatility very, very high right now in Baidu. And tomorrow we're going to see Baidu's implied volatility get crushed very, very quickly. So selling naked options is exactly what we want to do in this situation to take advantage purely of just the drop in implied volatility. Now here's what Baidu looks like. It's already trading after hours, but you can see just how wide this strangle is for the earnings trade in Baidu. It's very, very wide strangle, good strangle for us. We did the 225 all the way out here, but our break even is all the way out at 227.50. And you can see after hours, Baidu is trading up to 217. So if everything stays the same, both for Pandora and Baidu, these look to be great trades. We'll close them out very, very quickly tomorrow. I hopefully expect Baidu maybe to even trade just a little bit higher in pre-market. It might trade up to around 220 or so, but I think it might have a tough time getting all the way up to 227. That's another $10 in pre-market trading. So not quite sure if it's going to make that type of leap after it's made about a $15 leap or about a $10 leap or so just after market. So those are the two trades in Baidu and Pandora for earnings, and obviously we'll recap those tomorrow night. The other three trades that we made here tonight are all calendar spreads. So I'm just going to kind of briefly go over all of these in general. But the whole idea with these calendar spreads is that we actually don't have a lot of calendar spreads on right now. I think we have just 2 calendar spreads. And since we're getting past this earnings cycle, things that have maybe announced earnings or are out of the earnings cycle right now, we're going to start to see a major drop in implied volatility. So we want to take advantage of possibly a move up in implied volatility in some point in the future, and also get a little bit directional with some of these things. So the whole idea here with calendars is that they're low implied volatility trades, and they can kind of act like a little bit of a directional trade. Okay, so in each of these cases, we're taking a little bit of a directional stance based on where we put our strikes and doing the calls or the puts. So you can see with Goldman Sachs, we did the 180 call strike for both the September and the August. And for MON, we did the 115 puts for both the September and August. For FXI, we did the September and August 41 calls. So you can see that that's where we're kind of, basing our bets as the stock kind of trades somewhere in those ranges as far as price. For Goldman Sachs, we did the 180 call. I'll go over to that chart here, and you guys can take a look at that here. Goldman Sachs, we did the 180, and let me just get this bottom implied volatility off. Goldman Sachs, we did the 180 call spread, calendar spread above the market. So that kind of puts our range right up here around 180. And really, again, giving Goldman Sachs a little bit more room to run now that it's past earnings. We have definitely low implied volatility, so this is a trade you definitely want to make now. You don't want to make this type of calendar trade when implied volatility is high or above that 50th percentile. Right now it's in the 4th percentile, so it's very, very low. These are the types of trades you want to be making. When we go to the Analyze tab here of Goldman Sachs, you can see that based on the price that we paid and where our strike is, that we get this nice peak in our calendar right here at 180, but Goldman Sachs is already trading at 176. So we're actually in the money right now, meaning that if nothing happened and this stock didn't go higher from here, we'd actually make just a little bit of money at expiration. Now we're hoping to make obviously more than that, so anything higher than what it's trading at right now, we just continuously make money to about a peak up here at 180 as far as the price. And then we still make money, just less money obviously, all the way up to 184. So we've got a pretty nice range between 176 and 184 to make money on this trade with Goldman Sachs. Again, going back to the chart, if we do 176, which is about here, and 184, which is all the way up here, we've got a very nice window of opportunity that this stock can just kind of float up higher. We don't have to pin it on any particular strike, but anything in this window, and we make a good chunk of money. Now the same applies to these trades as well with MON and FXI. So we'll just go over the charts of those real quick, but same basic setup. You can see they're almost mirror images of each other. With MON and the 115 puts, we obviously are giving the market a little bit more room to the downside. So again, just continuing to play on this idea that after earnings, the stock has really taken a bath, and it just might level out here around 115 before it possibly regains its strength moving higher. With FXI, we're doing the same thing, kind of around 41 on the call side with FXI. So we've had a huge move in China large caps, and you can see just how quickly this stock has moved higher, this ETF has moved higher. And so we've basically centered everything just a little bit higher, very similar to Goldman Sachs, up at 41, taking more of a bullish directional bet here, saying, you know what, if this thing is going to launch higher, it may continue to float higher. That's typically what it does when it starts to trade higher, it just continues to kind of float in a sideways to upward pattern. So we're assuming it's just going to continue to float right into this range, hopefully, which will give us a great opportunity to make some money at expiration. So I know this was a little bit longer of a video, but as always, thanks for checking it out. Thanks for walking through all of these trades with us. The whole idea here is that this is a great video to help you understand not only what we're trading, but why we're trading, the strikes that we're selecting, the strategy behind earnings for Pandora and Baidu, etc. If you have any comments or questions, please ask them below. I'll get back to all of those tonight or tomorrow before the open, and happy trading.